Welcome to the Loveland Report and the Lone Ranger Radio Show with Cleve Loveland, the voice of real estate here in Orlando, and Bruce Woodburn, the Lone Ranger CrossCountry Mortgage, helping you with all of your mortgage news, helping you with your purchases, refinances, home equity lines, new construction, whatever you need when it comes to a home loan. The Lone Ranger's got the product. Then we've got Cleve Loveland out and about, working the real estate market, and what exactly is going on with real estate right now.
Today, Bruce, I want to jump in. I want to talk about how you budget for a new home and housing costs, and 2025, how that's going to be bigger than 2024 because we know rates are going to come down and sales will take off. Hopefully a great election will help that even more. And then how do you planning for mom and dad? I always talk about real estate planning and what's going to happen to mom and dad's house and how to look ahead on that. So this is something that affects us all. And sometimes it can be something where you discuss it with them, but other times they might get a call from a hospital saying, oh, they can't go home by themselves, that kind of thing. So they got to go into rehab or they got to go into assisted living. So how do you plan for that and what to do? And you can always give me a call about anything real estate at 407-352-8118. But Bruce, I saw some articles here about talking about how people spend nearly 30% of their income on housing, renters. That's actually a good
That's
number.
not a bad number.
That's not a bad number, which you usually run up against.
It used to be years ago, 28% was your target, but 30% is not out of range. I mean, I'm seeing people as high as 45%.
And the rental market is slowing down right now, but that's like when you look at somebody's income and their debts, what's on their credit report and their monthly payments, you want a debt to income of 30%. Housing. Yeah.
That's housing ratio. So we have two ratios. You have a housing ratio and what we call a back end or a total ratio. So the housing ratio is your monthly income divided into the housing. That's the PITI payment.
Yep.
That's everything included, including HOA.
Yep.
And then your back end ratio, your total ratio, is your income divided into the home and your other debts, car loans, credit cards, not utilities.
And what's that back end need to be to qualify?
Fannie Mae won't let you go over 50.
Okay.
FHA will let you pump a little bit higher than 50. VA, I've seen people as high as 65% on a VA loan, even higher.
Total debt.
Total debt.
This is what we talk about, knowing your budget, and somebody's thinking about buying a house, which they should be right now because prices are just going to continue to go up. We've had a Sleepy Joe crappy economy for 2 years, 3 years almost, and rates went higher. They're going to get better. Hopefully a good election. We're going to take off in Central Florida. The whole country's down the number of sales is down from 3 years ago, about 37%. Central Florida's only down
about buying opportunity, folks. You waiting for the signal. There it is.
Yep. And Central Florida's only down about 25%. So we slow down less than the rest of the country because we got a good economy. We speed up faster than the rest of the country when this happens.
We don't have the peaks and valleys.
And I still see multiple offers, which is kind of funny, Bruce. People ask me, how's the market? I'm like, well, which market? The first-time buyers market, the luxury market, the lakefront market. It's all different. The commercial market, all that's different we've got to compare that to your plan. What is your real estate plan? Right. But as we move into this, we're going to go into parts where we're going to go back into the multiple offer situation. So that's where they need to get with you and get fast-tracked, right?
Well, we can talk about fast track. I want to talk about the biggest challenges people are facing in the mortgage market today. What does inflation do to the economy and how does it impact lending? And what can buyers expect in terms of closing costs? And how can they plan for them? I'm the Lone Ranger, Bruce Woodburn, CrossCountry Mortgage. If you have questions for me, call me now at 407-250-9144, 407-250-9144, or WeBringYouHome.com. So the biggest challenges for buyers today in today's market is their down payment. They just struggle with it. They struggle with coming up with enough down payment. So where can the down payment come from? Well, it could come from a gift if you have an immediate family member. You could pull it out of your 401k, or you could save for it. But you can't just borrow money from a friend to put down.
What?
You can't borrow money from a friend to put down on a house.
I can't pull it off my sports bet app?
No, you can't. You absolutely. You cannot put it on a credit card. Now, you could pull money out of one home to leverage it, like people will get a home equity line of credit out of one home to put down on another. That's different because it's securitized.
Yep.
but you can't just have an unsecuritized loan and use that as your down payment.
Yep.
So those are some big issues that we're facing today. And the economy plays into that. Why do people struggle with that down payment? Because of inflation. Now, we didn't have inflation when Trump was in office, but boy, do we have it now. And it just amazes me when I see these debates that go on that people don't remember how good it was during Trump. And I know the reason that the voters are pretty much split across the board is because so many of them just have such a disdain for Trump that they just won't vote for him.
Well,
even though their lifestyle would be better.
And I want a good businessman in there. And obviously, listening to us, that's who we support. But bottom line is, in politics, no matter who's there, houses keep selling. And the market goes up, the market goes down. So
look at the market has been soft. It's been soft since Biden's been in office, right?
Oh God,
you would have to agree.
Yeah,
with that.
people are more worried.
Right.
Thank goodness they had 3% and 4% interest rates on their houses, because we would see a lot more foreclosures.
But you know what? If I look back, I think it spoiled people. I think if I were to compare both, the market was too good when Trump was in office, and it was too bad when Biden was in office. So why don't we just come in with the middle? Because here's what happened. You and I both know that those 2.5%, 3.5% 30-year fixed rates,
we'll never see those again.
But they spoiled people.
Oh yeah.
Now they're like, well, I don't want to give up my house because I'm going to give up that 3.5% rate.
But I think that's a good thing though, that it made them possible to survive the $200 grocery bill instead of the $110 grocery bill.
Well, that is true.
And it's helped them on that. But I really think, because right now, if we're low sixes, now you said after the Fed cut the rate, you said the rates would probably tick up a little bit.
Well,
and they did.
I said there was a good chance that rates would get worse if the Fed cut the rate. Now, I got a lot of flack on that. People emailed me like, what's wrong with you? How could that ever happen? So you have to understand the dynamics, because why does the Fed cut the rate? Tell me why. What's the main purpose of Fed would cut the Fed rate?
Speed up the economy.
To stimulate the economy. So when you stimulate the economy, what happens to the stock market?
Takes off.
It gets better, right? It goes up. But when stocks go up, bonds go down. So we want bonds to go up. So that works opposite of each other. So that's exactly what happened. The stock market rallied. Now, after Powell came out last week and uttered that they may not do any more Fed cuts anytime soon, it caused the market to go haywire on the bond market and the stock market.
Well, we went from 8% 24 months ago.
Yes.
We ticked up into
even
the
8.25%.
And there was no Fed cut.
There was no Fed
cut. And just with the bond market doing okay, rates dropped to the high fives.
Yeah.
So this is what people need to watch. But a good economy and the bonds do okay, and you'll see better interest rates. But a 5% rate is an awesome rate.
It's an awesome rate.
Over
now,
the
we're
history
not there yet.
From the beginning of time.
Yeah,
you can buy it down.
You can buy it down. So you can buy it down. And that's another thing that we discuss with our clients is it the right thing to do to buy it down? Or should you not buy it down and wait and refinance? So what we do is we run the numbers. How much would it cost you to buy your rate down? Let's just say you needed two points on a $300,000 mortgage.
$6,000.
$6,000.
Yep.
How much do you think it costs you to refinance a $350,000 house?
6, 7.
Exactly.
Yeah.
So why not just do it now and call it a day? But not everybody. That depends on your credit score right now.
Yep.
So maybe it would be better. Let's just say you had a 700.
Mm-hmm.
Okay. And that got you today a 6% interest rate. Well, why don't we spend the next 6 months to increase your credit, refi now, spend the next 6 months to improve your credit, then refi one more time and be done with it.
Yeah.
That might be the case.
Or lose
that's
PMI.
Not the case for everybody.
Or can you lose PMI? You're putting down 10%. Another year from now, you might be able to lose your PMI. Who knows?
A lot of people are refinancing to eliminate PMI or to consolidate debt or to drop their payments.
But that's what comes into play. I mean, that's why they need to call you to get fast-tracked, to get their application in line. You guys are working on mine right now. And how do people reach you?
407-250-9144. That's 407-250-9144 or webringyouhome.com. Cleve Loveland can be reached right now at 407-352-8118 or cleveloveland.com. How many people what percentage of people that call me to refinance right now, today, do I encourage to refinance, and how many would I discourage?
I'd probably say 1 out of 4. You probably say do it.
Well, it's about 50-50.
Okay. Half and
It's
half.
about 50-50, because if you need to consolidate debt, let's just say that you're drowning right now. Inflation has killed you. Your groceries are killing you, and you spent too much money on Amazon, and your credit cards are maxed out. Well, then let's do a refi now. Let's get the payments all consolidated. Let's get your cash flow coming in. Then we can look at possibly increasing your score, because if your debts are high, your scores are going to go down. So once we fix that, your scores will go back up.
Yep. And then as rates come down, get into low 5s, hopefully next year.
But a lot of veterans are looking to refinance, and they're getting hammered by these VA lenders, hammered by them. And they're very convincing. But I'm putting my veterans on a watch list, because I think there might be a better opportunity. Because here's the dilemma for a VA refi. If you do a streamline refi with VA, you can only do that every 241 days. You cannot just do it now and drop to 5 3/4. And then if the rates drop to 4 3/4, turn around and do it then. You're going to be out of the market.
Yeah.
You won't be able to do it. So let somebody that truly is honest about it, evaluate it. And I'll tell you whether you should do it now or wait.
All right. So Bruce, I'm getting a lot of emails now about this. This is a question I get starting in October. Are the holidays a good time to put your house on the market? And what's funny is we don't have 6-foot snowbanks to wade through in the winter. And yes, up north, home sales will drop to 10%, 20% of what they usually are in the spring, summer, and fall. But here in Central Florida, I think our winter months and fall are going to just about exceed our spring and our summer, because of the rates coming down.
Yeah, I think,
and this is where, right. and so I'm seeing more activity. The 4Ds are still happening. The diamonds and diapers and divorce and death still happening. There's one more. What'd you say? I always forget.
Downsize.
Yeah, the downsize. The 5Ds of life happen, and this is what affects housing.
Yeah, but here's the thing: when you're talking about should I sell my home during the market, how many people out there would go, I don't really want people tromping through my house over the holidays, right? A lot of them, right?
Yep.
So guess what happens? They don't put their house on the market. So the guy that does, the lady that does, the person that does, has more buyers and less homes on the market. The chances on them selling it for a higher price are better during that time frame, because there's less competition.
And I'm really interested to see, I'll have numbers in about a week or so on inventory. As inventory's climbed and we're up to a 4.5 month supply, almost a 5 month supply, sales have slowed. So if we're only doing 2,500 sales, and that's about Central Florida's typical winter, a little slow, down a little bit. But we will see those numbers, and we'll tell you what's going on here. You can always do that on the Loveland Report and the Lone Ranger Show. You can reach me at 407-352-8118 or go to cleveloveland.com or at Loveland Cleve.
Yep. Or, at Loveland Cleve. Boy, you're getting fancy over there. Or you can call the Lone Ranger at 407-250-9144 or WeBringYouHome.com. When we get back, I want to talk about what can buyers expect when it comes to closing costs. And I want to address interest rates and what you can expect for things to look like in the near future. So when we come back, don't go anywhere. We'll be back with the Loveland Report and the Lone Ranger Radio Show. Again, Cleve's number directly is 407-352-8118. The Lone Ranger is 407-250-9144. Don't go anywhere. We'll be back in 5 minutes